Last year, real asset big bang, I think a lot of assets to sort of the forefront of the asset spectrum, real asset spectrum, like gold and silver were becoming more prominent for investors. Still, I think there's many people that are underinvested, but it was just starting to get more sort of mainstream. What we have now is a lot more geopolitical and major power plays happening throughout the globe. They have been because of tariffs from the administration. They've been because of battles back and forth between China and the US, between other countries and so forth. But those are only kind of part of the uprising. The uprising actually means that real assets don't have value just for what they are in terms of price. They have value for their positioning in the geopolitical power battle. And that's more and more part of legislation, part of executive orders from the White House, part of government focus. It's all about how do we control the assets after they're out of the ground. And that's going to be where that uprising occurs. It's control. That's going to give a bid to the asset prices, but a much bigger bid over a longer period of time, because this is now serious for all governments. Back in the day, until 1971, there was the gold standard, which basically meant that countries could give their gold to the United States, receive dollars at a certain level. I mean, that was the idea. So gold had that anchor value in terms of actual currency. Now what's happening, and why central banks have been increasing their reserves in gold and will continue to do that, is that it allows central banks to basically have a component of their reserves in gold that kind of acts as leverage, as collateral for engagement with their own state or private banks, as well as with other central banks and other state and private banks throughout the world, because gold is an objective resource. It's not printed, it's not controlled by geopolitics, it is an objective resource. So the more that you have it in a secure manner on reserve for a central bank, the more it funnels into the operations financially of your country. And what's happening globally is that there's more and more bilateral trade agreements going on across the world. That's going to continue, particularly with tariff volatility, but it's happening anyway. It's just accentuated because of that. And the more that gold is stockpiled or reserved by these countries, the more there is that collateral for engaging in these trades. I'm not saying you need gold to trade oil or have an oil agreement, but gold becomes that necessary anchor to how the monetary system evolves and how payment systems evolve. It's interesting because the whole Fort Knox thing and all the conspiracy theories about, well, the gold's not really there, it's not what it was. Well, Trump's old Treasury Secretary in the former administration, Steve Mnuchin, actually physically went there. He was physically in Fort Knox. He physically ascertained the gold is there. It has not disappeared since 2017. Fort Knox is very, very secure. And security is an issue. So in terms of being concerned, for not having your own gold mines or major gold mines. I mean, there are actually amazing gold deposits in Canada on the junior mining side, and I know those are going to continue to grow in some amazing Canadian gold companies. But in terms of also partnering with allies across the world and having gold in reserve, where that gold is in custody really matters. So you can have a central bank that's buying gold on their reserves, but their gold's physically located in a vault in another country, but in a neutral country, in a country where you're not going to have a major geopolitical event or war or whatever else, which is why, for example, a lot of Asia and Asian central banks are putting their gold in Singapore because the vaults in Singapore are very, very neutral. So Canada's quite neutral as well. So there's certainly opportunity on the Canadian side to have that, but also to ally with nations that have vaults or gold supply. Silver is really interesting that way. It doesn't have that sort of tier one or the use of it as gold has for being in the financial system. It's not quite counted in the same caliber. So it doesn't have quite that shine. And that was one of the reasons I think silver was a bit depressed relative to the gold rise. But silver this year has outperformed gold. And I think it will continue to outperform gold for those reasons. It's still the safe haven, inflation side, monetary anchor, not for central banks, but in general for uncertainty hedging. But also it has that industrial use value. And even though there is concern, GDP in the US was down 0.5% last quarter. It's considered to be dropping in a lot of countries. And so there's that concern, I think, dampened silver last year. But I think now, even if that's going to happen, industrial use value, so building infrastructure, building defense missiles, building national security, national energy priorities needs a lot of silver. And there just simply isn't enough supply out of the ground to meet the demand that's long-term demand above the ground. This has been a thing, but right now, because of these geopolitical forces and realignments, silver is going to, I think, jump more into that industrial role as well. And so I do think silver is going to continue to rise from here. Initially, I mentioned the 232 investigation, which was launched a couple months ago. The first time ever, 232 was going to investigate copper as a strategic metal that's important for national security. This is the first time that copper's actually had that spot. Uranium has been there before, copper hasn't been there. So that already put a little bit of a bid to copper in the last few months. And what that encouraged was a depletion of actual copper physical reserves at the LME, at the London Mercantile Exchange. So basically the copper that's there underlying the futures contracts was basically just all moved into physical reserves served by China, by India, by these long-term players who are concerned that there could be tariffs on copper and there could be a real quick dearth of supply, and so a lot of supply was taken out of the market. Now you get this announcement by the 50% tariffs. Whether that happens or not, whether that's a negotiation tactic or not, it almost doesn't matter. The 232 investigation hasn't officially been completed, but I'm sure Trump is aware, or at least is involved with how that's going to look. So to me, what it means is when it does become official, regardless of where a tariff is, copper will be secured as a necessary asset to strategic defense, and that's going to give a global bid for copper. I would say that, and yes, there's been a bit of a bump out of that holding pattern since Israel and the United States basically targeted Iranian nuclear uranium enrichment capacity. And even though a lot of capacity does not come from Iran, it sort of gave a bump to the idea that, okay, more uranium needs to be enriched more quickly outside of wherever it's being enriched now. Mostly Russia and Kazakhstan, but the Iranian action sort of created a little bit of a bump up for the price now. So we're up near or closer near to the 80s level. I think that's going to continue as well. I think between the old 232s, between all of the bipartisan support and legislation that we've had for uranium, now with this activity just recently, and now with all the attention on critical elements and minerals and a stockpile and everything else, there is a lot of uranium focus. Also, an executive order that basically took the regulatory burden out of permitting and creating processing plants in the United States to make it be 180 days instead of like some stupid amount of time. That actually is going to help with us building the physical ability in the country to process and enrich uranium. More so, that's going to require demand for uranium. That's going to move up the price. I think the West has certainly been very behind the ball on that. And I do not know why they haven't moved more quickly in the past, because it's only been recently that this administration has talked about even having critical minerals reserve, which includes the 17 rare earth elements, and has put forth an executive order to basically secure that. And the last administration also put more tariffs on permanent magnets, which are the main out product for magnets that come from rare earths. This one is continuing that. So there's more and more focus on the sort of government federal side across the world, and certainly in the United States, on rare earths. It's a big miss to allow any country, it happens to be China, but to allow any country to almost have 100% control over the permanent magnets, which basically are in everybody's cell phone. They're in every missile defense system. They're in everybody's car, whether if you have electric windows, whether you have an EV or not. All of us use rare earths all the time, and every single one of those rare earths is mostly processed in China. That is a problem for any country. Why it took so long to have this awareness is just a dramatic inefficiency in what our government has been focused on. But I think there's an increasing awareness that something needs to be done, and something needs to be done fast. And one of the reasons I'm on the board, or decided to be on the board of a rare earths company, Meteoric Resources, where we have a big asset in Brazil, is because the U.S. government, actually, while it's talking about tariffs on the outside, actually signed an agreement with Brazil to protect its critical minerals as well as its rare earths for Western allied purposes. This is changing very rapidly. It is still a speculative part of the commodity curve. So the advice I would say is that if you're going to be investing in the rare earth space, do your homework, understand a little bit more about where they're used, where they come from, how they're processed, have a long-term view. But I think if you have a long-term view and realize there's going to be some volatility in geopolitics along the way, they're an incredibly good spot to put 1%, 0.5% of your investment portfolio as a starter. Yeah, so one of the reasons we are overweighted, both in commodities and also companies that utilize them in a good way. So energy companies, utility companies, they're international, as well as the commodity mining companies themselves, is about 60% of what we recommend. And the reason for, and it's outperformed the S&P this year. The reason for that is because of this real asset, uprising. There can be a lot of money that gets thrown out in speculative movement around things like NVIDIA, which has underperformed gold and silver this particular year to date, and other companies like that, and that's fine. But for us, focusing on what's real, what has a long tail of the geopolitical story, of an economic needs story, of a security needs story, where real assets are the anchor to all of that, as well as monetary story. Those things have long-term value. So that's where we start from, and that's basically how we position going forward.